Good morning, everyone, and happy Wednesday. The market's not looking too bad this morning, but it's definitely not looking great. It's kind of just really flat, and it's not really doing too much. But Tom, oil prices are continuing to just boom to the upside. Crude oil futures hit a high since, I believe, 2013, and it was at $112.50 per barrel this morning. Oil prices are continuing to fly, and the market's holding up for now, but then again, we do have Powell's testimony in about 30 minutes.
Yeah, that testimony is going to be very important for the overall market, Mike, but you're right. Oil is just continuing to fly up. It's an insane thing to see. I actually have a really good article by CNBC. This might be the one that you saw, where it says oil jumps to the highest level since 2011 as OPEC holds their output steady. I know that OPEC is going to probably try to go ahead and to pretty much hold production so that they're trying to obviously bring down the price of oil or at least stop it from rising as rapidly. But OPEC, we have to keep in mind that they also kind of work with Russia a lot of the time. So we'll have to see what they end up doing. I know that OPEC has a big influence over the oil market. So that's going to be big to see what they end up doing. But Powell's testimony later, Mike, that's also going to be pretty big for today because obviously people have talked about rising rates a lot lately, and they've said that the Russia situation might make the Fed less likely to raise it at least as rapidly as once thought.
Yeah, we will see. We will see. Lots of crazy things going on in the world and the markets right now. Looking at some of the stocks this morning, I will say my watch list is basically split 50-50. We're seeing some of these growth stocks continue up, like good old DraftKings is up a little over 2% right now. But, again, like it's not like a major crazy move. We did have some earnings yesterday, like SoFi and then, CRM, and those are doing decently, but I don't know. I mean, it's just, I feel like nothing has any, like, great, amazing momentum this morning. Like I said, CRM, it's looking decent, but lately we've just been seeing earnings kind of, especially if they pop to the upside, they're just weak.
Yeah, they really are. Like CRM had some pretty good numbers that I was seeing in after hours, and it didn't really go up that much. I was expecting maybe more of a rise this morning, but it looks like it's just kind of pulling back, only up 2%, which is a little unfortunate. I know that SoFi is doing a lot better. They're up like 11%, but as we can see, they're also pulling back in a major way. I've noticed, Mike, that most of the time, if these stocks have been popping on earnings lately, they start to pull back in pretty big ways. I know that Enphase was one that was kind of pulling back right after they reported earnings. And I've seen a lot of setups similar to what we're seeing with CRM and SoFi this morning.
Yeah, I agree 100%. And even Google was like a giant one. And they even had split news. And they ended up giving back all of their gains and more. So, yeah. But it does look like, obviously, I guess you can say, assets that have been very stable lately. Of course, you have the commodities like oil, gold and silver. Defense stocks have been moving in a pretty decent way. Then we also have those potash stocks. So Sean pointed out MOS is still moving. So looking at MOS, it's up almost 4% today, Tom. And, just like Sean said, like these potash companies just keep on moving.
Yeah, they really do. It's insane to see how they're still rising. I know MOS on the daily chart is getting so overextended. I'll be awaiting a pullback shortly, but I don't know when that's going to happen, Mike. Like, who knows how high we're going to get in the short term. It's insane to see this one keep breaking out. And honestly, if we're looking at this on like an intraday level here, we can see that it had a pretty good resistance yesterday, right around $54.17 or $54 there. If we start to break above this in a major way, who knows? It might be a pretty good intraday breakout type of play again. I know that it seems like every day this stock just keeps breaking.
Yeah, for sure. Alrighty. Head was like, let's go, because Head was really early with this one, Tom. I remember, like, he brought it up on the stream, and we're like, yeah, we haven't heard about this company, but he was pretty early. So if you're in it, Head, I hope it keeps booming to the upside for you.
Yeah, me too. I know that he talked about it a while ago, Mike. It was like a few weeks ago, like when he first brought it up, and it's had some great movement ever since then. So really good call out, Head, and that was a really good look there, especially with the Russia situation going on. It's just a a very interesting stock. And obviously, Mike, like the potash stocks, they deal kind of with these different materials and minerals that are over like in Ukraine and Russia. So that's why they're booming so much, if anyone was wondering what that means.
For sure. And then Jerry said Boeing's looking really good to him. And then I also saw that in Discord, I think he just exited some Boeing calls. But yeah, I mean, Boeing's up like 2% today. It's kind of disappointing how Boeing has been really lagging behind a lot of these other defense stocks like, Raytheon and Lockheed Martin. But still, I mean, it's doing okay. Again, it's just, I don't know. I guess it's just doing okay.
Yeah, it's just doing all right. Not the best. It's definitely pulling back. Well, I should say like Lockheed's pulling back today. Some of these defense stocks that have been rising. Boeing is looking decent. They actually had a nice little gap up. They're bouncing off that 194 support. You could also say maybe like $195. But as they come up today, Mike, we have to be pretty careful because they're going to be meeting some pretty stiff resistance here. I have a big one around $200 even. So that's going to be like a big psychological level there for Boeing today. Maybe if we break above that, it could possibly run back up to the top of that channel from yesterday around 203.
Here we go. Alrighty. Jerry said, need help with my next trade, never trade financial stuff. For sure, just let us know. I know like these banks have been brutal, Tom. Like I see JP Morgan's coming back up a little bit, but the past couple of days have been horrible.
Yeah, it really has. I'm really hoping that Powell's testimony this morning helps banks move back to the upside. As we talked about, banks were pricing in rates going up. And now that the Fed might not raise rates as quickly, I think the banks are taking a bit of a tumble on this. I know that we've talked to some people in the chat who work like in the banking industry and stuff like that. And they said that rates were a pretty big deal. So that could be why banks are down in the short term. And obviously, there's just a whole bunch of issues going on with Russia, of course. Obviously, that's weighing in on banks too. But it's just insane to see JP Morgan at all the way down here, Mike, at like 137, and they were at $170. Like, let's see, they touched 170 back on January 13th. So within just like a month and a half, we're down on one of the biggest banks in the market, like 19%. That's just insane.
You know it. So can we get some levels for JP Morgan?
Yeah, honestly, it's approaching a resistance from yesterday around $140. We are a few points away from that. Now that we've fallen down, Mike, we are pretty far off the levels from this year. We have to go back like a long ways to find the good levels. I would say a big resistance though is 140. That's going to be huge intraday today. As I go back here, let's go like to the 180-day 4-hour chart. Man, we have to go back really far to get to these levels, Mike. We have to use like a max daily even to like get back there. But yeah, as far as like falling to the downside, if we keep going down, unfortunately, I think that low of yesterday around 133.50 will be a pretty good support today. I didn't really see too much movement yesterday intraday, Mike. Like there was that big support around 133 to 134, but other than that, there was a bit of a bounce at 136. So maybe you can watch that, but I would honestly eye up that 140 resistance to the upside. I think that'll be the main thing to look at today.
Gotcha. All right, good to know. Let's check back in on the overall market really quickly. It looks like we are technically up like 0.5%, but the market has not moved at all since it opened. It's just very flat. Let me do a quick scan to see if we have any big movers so far this morning. Let's see. I have the scan loading up. Looks like Rivian is moving. Let's see, to the downside. Oh.
Yeah, to the downside for sure. Wow.
Dang, Tom. What is going on with this one? I have to check out the news. Let's see.
I actually saw some bad news last night with Rivian. I can't remember exactly what it was, but I did see some stuff coming across. Maybe it was some stuff with Elon Musk and Rivian. But I did see some bad news, and I was expecting it to go down. So definitely down in a big way, Mike, down 7%. I bet George Soros is pissed.
True. All right, so I saw news. It says Rivian missed 2021 production targets and is now reportedly bumping up prices. Also, they had their price target lowered by analysts. And they
that's what I saw. I think I saw RBC lower their price target.
Yeah, yep, that's it. And then on top of that, it looks like Elon Musk gains at Tesla, rival Rivian as ladder hikes prices. All right, okay, so yeah, I mean, it looks like Musk had some things to say about him, plus that lower price target, like you said, Tom, and then the missed production targets are all just kind of messing this one around. So
Yeah, it really is. I'll tell you what, those production targets are terrible to miss. I know that we just saw another big EV stock, Lucid, missed their production targets. Then they actually cut their guidance for their production this year. So as we see Rivian approach their earnings, it's going to be rough, Mike, because if they cut their guidance and stuff like we saw with Lucid, I'm going to be worried about Rivian in the short term, Mike. I know that it might still be pretty good for the future, of course, and there's some big players buying it like George Soros and stuff like that. But in the end, I mean, the stock's just not doing well. These companies are having a lot of problems with production, and I will say, Mike, you've been one of the ones saying that these companies have a lot of issues to contend with, and it looks like they are definitely not doing the best with those issues, Mike. Like, I would have honestly expected Lucid and Rivian to address those production problems as best as they could, but maybe they tried and they just couldn't help the situation overall. But either way, it's not good for the stock to miss production targets like that and to cut guidance. So definitely not good news for these startup EV companies.
True that. And then George inserted a quote, and basically like how Elon Musk he made like a tweet the other day, and like basically like Biden was only giving credit to Ford and GM, and he's like, well, I actually like I don't have the exact quote, but it was like Elon Musk said something along the lines of like how he created like 50,000 jobs in the U.S. with Tesla, where like Ford and GM might have only created like a total of like 20,000 or something like that. But yeah, I know Elon had some things to say just related to the current administration and the EV market.
Yeah, and I will say that EV market is pretty insane. Even the regular car market's insane. A lot of the American companies like Ford and General Motors, for example, I mean, I know a lot of people already know this, but I think a lot of people will also be surprised to hear that companies like Ford, I mean, they make the majority of their vehicles in other countries. Like obviously a lot of the parts that they use are made overseas. I know Ford has a lot of huge plants down in Mexico. I know Trump was trying to get Ford back in the United States a little bit more, but I know that they're huge in Mexico. GM is made out of the country as well in some cases. So there's definitely a lot of crazy stuff with the overall car industry, Mike. And it's nice to see Elon come out and say those things, because I've also been in agreement with him in that I feel like that the government should give them more credit. They're doing very well in the EV sector. And to be honest, you would think that some people like Biden and just, all the progressives who are pushing clean energy would really like Tesla. And I guess it's just because Elon Musk has an opposite view on politics is why they don't like him. But in the end, I mean, his company's pretty good for the world in general. Yep.
Alrighty, so with some of these other questions, we have Alex saying, thoughts on C for long-term shares. So Hunter and I were looking at JP Morgan's fundamentals the other day, and they looked pretty good. I did not look fully into Citigroup's fundamentals, but I can in the future. So yeah, honestly, I have not looked at their fundamentals too much, so I don't really have an answer for you related to C. But JP Morgan is pretty good, and they have been doing a lot better than C. So if I were you, I would take a look at JP Morgan, but I will also take a look at C later today. And then, let's see, we have Sam mentioning CRM dropping. Alex also mentioned CRM in the red. Yeah, I feel like all these earnings plays, Tom, all these earnings gap up plays, like they have like a really good after hours and they just like give it all back like the next day.
Yeah, they do. It's insane to see how it just keeps falling down like this. Like CRM had pretty good numbers too, so I was expecting them to maybe pop back up. Like we keep talking about, Mike, it was another theta burner here. The IV just got destroyed. That stock was only up like 2%, so I'm sure the calls weren't really making too much. And now that the stock fell, I mean, who knows? The calls are probably down in a major way now. We saw a similar move with this with AMC, Mike. AMC closed yesterday around $18, and then they opened today right around $18, and IV took a huge hit. So I feel bad for anyone who tried to play the earnings on AMC, CRM, or any of those stocks in general. It's just, it's always scary when you're playing earnings. It looks like you could have done good on SoFi this morning, or Sophie, if you would have bought it at the right time. But still, though, even those calls probably aren't up too much. Like, honestly, Mike, I'm looking at the weekly expirations, and at the money is in the negative now. So even SoFi is not the best.
Yeah. And then related to CRM, this is brutal. Like, guys, check out this weekly options chain on CRM. The calls are down anywhere from like 97% all the way to like 13%. So the calls got annihilated. And then the puts are down anywhere from like 10% to like 90%. So literally like every single option on the CRM weekly chain got destroyed. And yeah, Tom, like you said, that was a huge theta burner.
Yeah, that's rough for them. I feel bad for everyone who played those earnings. I know that a lot of people were looking at Salesforce. I know that that's been a pretty big company over the past few years, and it was definitely on the recovery heading up into those earnings. But yeah, I guess they didn't report good enough numbers to please the market. The numbers pleased me, but hey, I guess the overall market right now needs it needs some good numbers, Mike. I've seen a lot of earnings lately go pretty south, even when the numbers are decent. So it's a crazy situation. Of course, earnings are always 50-50, and that's part of the reason why earnings are so hard to play. And this is just such a good example with that theta burner here. I mean, that was a big drop on that IP.
Yep. All right, Tom, check out RSX. This is the Russian ETF, and I'm seeing news in the popular news tab saying that RSX is halted for just on a circuit breaker. So that is interesting. It's down another 7% today. It looks like it just got off the halt. But yeah, this one is one of the most volatile stocks in the entire market right now. Technically, it's down around 6 to 7% today, but it's coming back up.
Yeah, and over the course of this week, ever since Mondays, I guess we could say the close of Fridays after hours to now, RSX is down 50%. That's insane for an ETF that covers a whole country like that. So that's crazy. I know that obviously the Russia situation is going insane, but RSX stock is just nuts, Mike. Like, it's flying right back to the upside now. We're down 2%. We might push back up into the green with the way it's moving right now, but who knows, Mike? I know the Russia situation is not getting any better. They have that convoy heading towards Kyiv, which is not good for them. I know that that's a bad situation, and obviously anytime you have any thoughts of war or anything, it's bad. That's why we're seeing RSX down so much. I can't believe that ETF got destroyed that badly, Mike. Like let's imagine that the United States went to war with somebody. Like, I would never think that the US market could fall like this, but who knows? I guess if the whole world's selling you off, it could. But man, that's just such a crazy thing to see RSX down this much from highs. We were at $32. Now we're at $8. That's such a steep drop.
Look at that IV. Like, that is one of the most explosive IV increases I think I have ever seen. It went from 50% all the way up to highs of 320%. Actually, you know what? It went from 23% back in October, which is where it was at the high. Back in October 26th, IV was at 24%. Today it's at 320%. So let me go to, let's say I went to like the 20 strike puts for, I don't know, maybe like January of 2023. I can't even imagine how much these things are up over the past couple months. Yeah, these things went from $84 up to over $1,200 over the span of literally 2 months.
Yeah, that's insane. I'm surprised it didn't even go up more than that, given how much this thing fell. You said it went from 84 to like $3,000?
No, 84 to like 1,200.
Oh, 1,200. Yeah, wow. I mean, I would have expected more of a move. So that's not as much as I was thinking, but obviously that's a lot whenever you're only dealing with $84. That's, you over 10x yourself. So that's great to see if you would have been in those. But yeah, I mean, that's insane, Mike. That IV's up above 300%. I was going back and looking at DWAC because I know that they had some insane implied volatility whenever they first came on the market, but they weren't even close to 300%. I mean, that's really insane. And I'm sure there's some other countries getting hit as well like this, that we obviously don't have ETFs for Ukraine or anything, I don't think. So, but I'm obviously sure that other markets are doing terrible too.
Yep. And then Sam actually made a really good point related to like Lucid and Rivian. Sam basically said Elon Musk did say that Lucid and Rivian would have problems mass scaling like Tesla did, and it would be a wake-up call. So we actually talk about this a lot on the show, and I'm glad you brought it up, Sam, because like of course it's easy to join the hype train with Lucid and Rivian and all these other EVs, but there's so much that goes into becoming an efficient and profitable EV company. While the industry is growing at an insane pace, it's hard to do. It's hard to like I said, become an efficient and profitable company. Musk did say, just like Sam said, that it'll be hard for them to achieve full-scale production, and I believe Elon also said it'll be hard for them to achieve break-even cash flow. So that's very interesting. And, I think we're in for some interesting times with these EV stocks, Tom. Like, over the next couple of years, I think it's going to be very interesting to see how this whole situation plays out. And, of course, for Rivian and Lucid, but even for some of these other, I guess you can say, traditional car companies like Ford and, some of the other ones.
Yeah, I'm a little bit worried about them as well, because I know that like Ford and GM exploded there for a couple of months. Like Ford went all the way up to $26 from COVID lows of like $4. That was an insane move to the upside. I feel like that some of these other stocks like Ford and GM might have gotten a little bit overhyped in the short term as well. I still feel like they'll do decently in the long term. It's just in the short term, like this stock movement was insane. I know they kept innovating and investing back into their EV markets and stuff like that. So that's part of the reason why they were up. And then also we can't forget that Ford has a big stake in Rivian, Mike. Like I can't remember the exact percentage, but I think it's like 15%. I know Amazon has a really big stake in it as well. So we'll have to see how that goes. I know that General Motors actually just sold their stake in, I believe it was Lordstown Motors the other day. So maybe we'll see Ford start to sell out of their stake in Rivian. And that would obviously be a really bad scenario if we saw Amazon or Ford do that. I think that would be very telling if that happened, to say the least. But it sucks to see Rivian down this much, Mike. It's down 8%. I'm not someone who hates on these companies by any means. I think some will still do decent in the longer term. It's just for the short term, they have so many issues. And whenever you see a company raise their prices by 17 and 20%, that's pretty big, Mike. Like they just raised their truck this morning, the price by 17%. Could you imagine that? Like imagine anyone who was like looking to buy that over the past few days, and now you woke up and you're like, now I have to pay 17% more. That's a pretty big increase right there on a price of a truck. I mean, those things aren't cheap at all. That's probably a 17% increase on like $70,000 or something.
Inflation.
Yeah, they'll blame it on that, right?
Oh, gosh. Yep. Alrighty. Sean said Starbucks looking nice. Let's take a look. Starbucks is looking pretty nice today. It's up like 3%. Starbucks over the past couple months has definitely been struggling. It had highs of like 126.30. Right now it's around like 92.70. It has dipped off quite a bit. So I'm actually curious on the fundamentals of this one. I'm probably going to dig deeper into this one because, over the past couple of years, it's been very, very consistent with how the stock moves. It's basically just been on a non-stop uptrend since like 2008. So that's awesome. But like anytime I go to Starbucks, like it is always packed. Like there's not
always is.
Yeah.
And then you got like a line wrapping around the store and people picking up online orders. It's insane how big they are.
So like the point is like I feel like Starbucks is one of those companies that of course it most likely does not have the potential to like double or triple over like the next couple years, but I feel like it's one of those value stocks that's like relatively safe. Like I guess sometimes it can be I don't want to say a hedge, but it could be nice to have in your portfolio because like when you see, some of these, I don't know, growth plays dip down, sometimes you see the value stocks hold up a lot more. So, I'd be curious to take a look at their fundamentals later today. But yeah, I mean, it's looking pretty good today.
Yeah, it is. It's having a nice uptrend. We're almost up 3% today, and for a stock like Starbucks, you can see even just looking at the candles, like the green candle today is pretty large compared to most green days. So that's good to see. Hopefully it keeps going up, Mike. I think that'll be awesome. But I'm with you. I love Starbucks for the long term. I think they'll be very, very sound fundamentally. Like you mentioned, they already are pretty sound, and not obviously they've been dipping down the past few months, but I don't think that they're necessarily doing terrible by any means. Like you said, we'll have to eye up those fundamentals, but for the longer term, you almost just can't go wrong with a company like Starbucks. The chances of them going under are very small. And I feel like compared to their prices of even COVID, they're not up a terrible amount. Like if we go look at stocks like AMD, for example, from COVID, they were at like $40. Now they're at 115. Starbucks is up, but keep in mind, it's just like you said, Mike, it's almost having consistent movement to the upside and the downside. And I feel like right now it's at a pretty good price point to start buying in. Kind of like how I feel with JP Morgan. JP Morgan has started dipping off similar to how Starbucks is here.
Yeah, I just had to look at their fundamentals a little bit more. What I'm going to do is I'm just going to pull up the dashboard really quickly and just take a quick peek to see how it's doing. So give me 1 second. So let's see. It's loading up right now. The price to sales ratio is 3.5, which is good. But then again, it is a value stock. So, it's not like a tech play. I'd have to compare that price to sales to other, I guess you can say, companies similar to Starbucks. They are cash flow positive, as you'd expect. Their cash flow has been pretty consistent lately, with the exception of 2020. But then again, 2020 was a fluke year. Like I said, their revenue has been growing consistently, as well as their cash flow. The only, I guess you can say, exception to that was in 2020 when their cash flow and revenue both were lower. Let's see. I'm looking at some other things. Let's see. Yeah, I mean, overall they look pretty good. I would just have to compare some of their valuation metrics to companies similar to Starbucks to see how we're looking. But at like a sneak peek, initial glance, it looks pretty good.
Yeah, that's good to see, Mike. I'm glad that it's looking good. I'm pulling up the dashboard on a separate monitor here so that we can get it up for everybody here. But let's see. So we have it up here. We got Starbucks. Let's press that enter button. Get it loading up here for us. But yeah, I mean, Mike, it's insane to see how Starbucks has been with everything like this. I think I might have broke the dashboard, Mike.
No.
Yeah, I know. I'm typing in Starbucks here, but it's not going. I think it's something on my end though. Obviously the dashboard's been getting updated a ton, guys. So obviously it's all on the internet now even. So you guys will be really happy to see what it looks like when it does come out. It's not even in the Google Sheets anymore. So it definitely looks a lot better. But either way, Mike, it's good to see that their fundamentals are doing good. I will say on a charting aspect, it looks really good in my opinion. And personally, I'm going to be averaging into this one. This one's one of my favorite stocks. I'll just say it right now. I'll probably be buying some shares over the next month or so. Almost guaranteed. At least I'll short some puts. At least if I don't get filled with the shares, I'll at least make that premium.
True. All right. So checking back in with the market, we are seeing stocks, at least seeing some stocks, definitely trade lower. My poor Zoom is down almost 5% today. 5%. So let's see. Yeah, Zoom's definitely taking a beating today. It is
coming. They just had those earnings too.
Yeah, I know. So their support's right around 114. They also had a low of like 112 for like a second in after their earnings report. But yeah, they're looking pretty rough, even though their fundamentals are pretty good once again. Like, of course, they lowered their guidance, the guidance came in lower than analysts expected, but still, like we talked about yesterday, Tom, it's like, let's say, just for easy math, let's say everyone was expecting Zoom to increase their revenue by, I don't know, 15% over the next year. They just said, all right, instead of increasing it by 15%, we might only increase it by 13%. So either way, I'm going to make a video dedicated to Zoom later in the week so everyone can get a full look at their fundamentals. So be on the lookout for that. Mason said, any thoughts on VXX put for a couple day swing? I would say statistically it's probably a good idea to bet against the VXX. Let me take a look at the pricing really quickly. Give me 1 second. It is concerning how the VIX's implied volatility is elevated. So if you did get VXX puts, I would strongly consider going in the money. So like, let's say if we looked at two different options, let's say we went to like the January 2023 chain, and let's say you looked at like the 25 strike put, that'll cost around $1,000 right now. So like if you were looking at a setup like that, I think it would just be smarter to get like a shorter expiration that's deeper in the money, because the closer you go to the current day, the less implied volatility affects the options pricing. Implied volatility mainly affects options that have a lot of time with them. So basically, if you go close expiration plus deep in the money, it's essentially just like a short position with the ETF, or ETN. Like I said, statistically, it's good to bet against the VXX, but you just have that, I guess you can say, relatively small probability that things get really, really bad in the market. In that case, VXX would pop up a lot, but I would say overall it's a decent play. I would say I like it for the most part. Just understand that we are in a very volatile time, and there's a decent chance that the market trades lower, which would mean the VIX trades higher. But the main thing is just that options pricing, so consider going in the money.
Yeah, and anything can happen. Like Mike said, we're in a volatile time. I feel like the VIX to the downside is definitely a better play statistically, but looking in the short term, we've been having some crazy like black swan events coming out, and as we know, there's like a convoy heading towards Kyiv in Ukraine, and who knows, once that convoy gets there, we might see some intense fighting, or who knows what'll happen. So just be careful. I feel like it's a good play, especially in the short term, but it's so crazy right now with everything going on in the world. So it's obviously not it's obviously a lot different than like 5 years ago, just during the summer. Like it was a lot calmer back then. So right now we're obviously in increased tensions and everything like that. So it's going to be very hard to play the VIX like that, especially if you're swinging it for a couple of days. I feel like if you're getting it for like a quick scalp or something, it's a lot easier to trade. But if you're swinging it, it's going to be a tough one, especially with all these events going on. But I'm glad it's to the downside, Mike. I think that'll play out better historically as well. So that's good. And like I said, there's all these tensions going on, and I really hope to see some type of resolution or something soon. I know that they were holding talks earlier in the week and possibly over the weekend, and it ended up not amounting to anything. It ended up coming down to Ukraine saying that they like refused to surrender. So it's just it's not getting any better anytime soon, it doesn't seem like.
Yep. All right. So Tom, it looks like the market's slowly trading higher, which is a good sign, but then again, we're in some volatile times, so I wouldn't be surprised if it retested maybe its pre-market support right around 430 at some point.
Yeah, I wouldn't either. That's actually a pretty big support level there. So hopefully we see it touch below 430. I have a pretty big level down there around 427 as well. So some pretty big levels to the downside to look for. If we keep rising up here today, Mike, like I would think we might be able to retest this like 437.50 to 438 resistance. I know that we keep bouncing down off of that level, and at some point I would think that we break that to the upside. So maybe we'll see a nice push up towards 440 at some point. But like you said, I would not be surprised if we even ended up in the red today, given everything that's been happening lately. We can see yesterday, Mike, the market was pushing up in pre-market, doing pretty decent, and then once the market opened, it just tanked right off. So it keeps doing these moves where we'll see it up in pre-market, then down all throughout the day, and then it'll rise back up the very next day. So definitely all over.
Obviously, I want the market to boom up, Tom. I want the market back at all-time highs, but realistically, the market itself and market makers are pricing in a more volatile market over, the next coming weeks and months than they have been since what looks to be what is that? What looks to be January of 2021. So we can just tell this by looking at the implied volatility. But even if we look at like the Vix Index, this also gives you a nice gauge of volatility that the market is pricing in. So that's interesting there. And basically, I know a lot of people, look at the VIX mainly as like a short-term hedging tool. But if we go to like the Vix Index, VIX, we can see it's right around like 32 right now. Basically, the higher this is, the more volatile the market is expected to be. So like we can see just like a couple months ago, the VIX Index was like around 16. So it's over double its price from a couple months ago. So that just tells you that, market makers are definitely pricing in some crazy movement over like the next couple weeks and months.
Yeah, they really are. And I mean, can you blame them? I mean, we're having all this stuff with Russia. We have we have everything going on with Powell and raising rates. And talking about Powell, he should be talking right now. So that'll be an interesting thing to keep our eyes on as well. But yeah, I mean, you can't really even blame them right now either. I mean, the market's been insane, and I would expect a big move too. We're also seeing stocks. I know that we talked about this a little bit in Discord like yesterday and over the past couple days, but stocks are getting really close to like bubble territory in some cases. Like, in my opinion, the way that the SPY has went up ever since COVID is just insane. I know the Fed had easy policy going on and stuff like that, but personally, like, I think we're seeing a lot of stocks get up into like bubble territory. The SPY, even like Apple, Microsoft, Tesla, obviously, I know they've been pulling back, but man, I mean, they were so high at one point, it was just absolutely insane. And then, of course, we've even been seeing the bubble burst on some of these growth stocks, like Zoom, for example. I mean, their bubble definitely bursted. They're all the way down to 115 and going lower. And who knows? It looks like they might even be going even lower in the short term. So Zoom had their bubble bursted, DraftKings, Palantir. I mean, you name it. These growth stocks have definitely given back a lot in terms of their valuation. So it's been crazy, Mike, and it looks like some of those bubbles have bursted, and I'm pretty worried for the overall market, and I'm worried especially because we're seeing big stocks like Netflix. Like, look at the way Netflix has pulled back almost 50% here from the all-time high. That's insane. Facebook, Twitter, Snapchat, all three of those huge pullbacks. Even stocks like PayPal have had huge pullbacks. And now we're starting to see big banks like JP Morgan even pull back. So I think at some point the market has to give.
All righty. All right. So basically, Tom, we covered all of the main movers so far today. It looks like we are seeing a lot of these growth plays take a hit. DraftKings, Zoom, Rivian, even Snapchat are all trading lower by the minute right now. Are you watching any specific plays? Like, I know we basically covered everything, but are you seeing anything I missed? Anything like that?
Yeah, one huge thing that I've been watching all week, and it just continues to fly to the upside, but it's for some reason it's been off of everybody's radar lately, is DWAC. It's continuing to go up at a steady rate, which is nice. So looks like it's having more nice movement to the upside. We're about to break out above $100. I know we're definitely testing it right now and moving back to the downside. So it might not necessarily be the best play at this given moment, but I will say eye it up because it could be a pretty good play later on today. It's getting a lot of volatility. I know that app came on the App Store. At this point, it's almost like a week or like a week and a half ago. I know some people are allowed into the app, some aren't, but either way, I mean, the stock is doing very well. Another 3% up day. I know that we were at lows like late last week, around like $85. We even hit 75 there in after hours, and we're all the way back up above 100 now. So DWAC is having itself a week while we're continuing to see stocks like Facebook not do very well. So it's pretty weird to see how DWAC is outperforming those other social media stocks. Obviously, they have the hype right now, but it's just insane to see it continue to go. And personally, I think that this, maybe not the stock will do well, but I think that their platform will do quite well.
Alrighty. We have Raymond saying PDD is dropping fast. How's that one looking?
Yeah, it is actually dropping pretty fast. It's unfortunate to see. It looks like on the daily chart, PDD might start to make new lows here over the next couple of days. We're getting really close to that 47.50 low, so be really careful with this one. We can even see intraday is falling off, so more bad movement, Mike. I hate to say that for the China stocks, but they just continue to go down. Like BABA's down again, PDD's down, Baidu's down again, and Baidu had good earnings yesterday, so I was getting some renewed enthusiasm for the China plays, but they continue to go lower. And as we keep talking about Russia, Mike, I know RSX continues to go down as they push into Ukraine. We still have that fear of China possibly going after Taiwan. And, everyone says if we're not doing anything to stop Russia, what would we do to stop China taking over Taiwan? Now, I know China's economy will be affected a lot more than Russia's will if we start sanctioning China. But in the end, really, what's going to stop them besides the sanctions?
Yeah, not good. Not good. All right, Tom, do you have any last-minute plays? Because if not, we will close out of the stream.
Yeah, it sucks to see that a lot of stocks are coming back down. We have AMD pulling back again this morning. They started to run up earlier in the morning. Now they're pulling right back down. A lot of my watch list is red. Half of it's green, but, it's all these oil plays that are green. Like we have Exxon and Mobil back in the green, of course. They're up to $82. We have crude oil all the way up around 110, which is just insane. I cannot believe it's up that much. But like I was saying, a lot of my watch list is in the red today. So looks like the growth stocks are definitely pulling back. I know Roblox is down in a big way, Matterport, Unity, Palantir, Peloton. So definitely a bad day for growth, Mike, which is a little unfortunate, but I guess we'll have to just keep looking at these oil plays because it seems like that's the only market that continues to move up.
Yep. Alrighty. Well, before we close out, I just want to personally thank everyone for joining. So thank you so much, Sam, Alex, George, Vicky, Michael, Sean, Keisha, I'm Fierce, Hunter, Jerry, Head, let's see, Sam, and Raymond. And then Mason too. So thank you guys so much for joining today. The market is pretty mixed, but a lot of stocks are definitely slowly fading to the downside. So be on the lookout for that. And remember, be aware of, I guess you can say, current updates with the Russia and Ukraine situation. I know that giant convoy is still headed straight towards Kyiv, and it's not looking good. So be on the lookout for that. Besides that, thank you guys so much for watching, and have a great rest of your day.